Hey everyone, welcome back to my channel. Today we're diving deep into one of the most important and controversial topics in American economics and history. Why the Federal Reserve System must be abolished. So I'm going to approach this from the perspective of the founding fathers such as Thomas Jefferson and Thomas Paine, and I'm going to combine it with the insights of Austrian economics from thinkers like Ludwig von Mises and Friedrich Hayek. So these are the voices that warned us about centralized control over money, about fiat currency, and about unaccountable power. So if you're tired of endless inflation eroding your savings, if you're tired of these boom and bust cycles wrecking the economy and trillions of dollars in national debt, this video is for you. So we're going to start with the Federal Reserve and what it actually is and how it actually operates. Then we're going to expose its major problems and its flaws. And then finally, we are going to discuss why it's time to return the power over money to the people as the Constitution intended. So if you're curious, if you're interested, stick with me and let's dive in.
You're traveling through another dimension, a dimension not only of sight and sound, but of power and profit. A journey into a wondrous land whose borders are that of imagination and self-interest. Your next stop, a place where nations rise and fall between commercial breaks, where truth is rated E for everyone, yet remains adults only, and where the evening news and the evening prayer sound suspiciously alike. You take the red pill, the blue pill, or the one paid for by super PACs. It doesn't matter. The rabbit hole was paved over years ago and turned into a toll road. Submitted for your disapproval. You are now entering the conflict zone.
So let's start with the basics. What is the Federal Reserve? So the Federal Reserve is often called the Fed, and it is the United States central bank. Congress created the Fed in 1913 through the Federal Reserve Act, and it is a hybrid public-private structure. The boards of governors consist of 7 members, and it is public. The president appoints them, and the Senate confirms them. Then there are 12 regional reserve banks structured like private corporations, with stocks held by member commercial banks. However, there's a caveat here. It is important to note that that stock is not normal ownership. It cannot be traded, it pays fixed dividends, and it gives no real control over policy decisions. So, what are the Fed's main tools? So I'll list them out for you 1 through 4. Number 1 is it sets interest rates through the Federal Open Market Committee, or the FOMC, and it primarily targets the federal funds rate. Number 2 is it conducts open market operations, which means it buys or sells government securities to add money or to remove money from the economy. Number 3 is the Fed uses something called quantitative easing, or oftentimes you'll hear it as QE, and this involves massive purchases of bonds to expand the money supply. And lastly, number 4, the Fed supervises banks and acts as a lender of last resort. Currently, the Federal Reserve's balance sheet stands at around $6.5 trillion, and this is down from post-COVID peaks, but this figure is still astronomical. It's still huge. And it creates money electronically to purchase assets, thereby expanding the monetary base. So the origins of the Fed trace back to a secretive meeting in 1910 on Jekyll Island, which is in Georgia, where influential bankers, including associates from JP Morgan, drafted the plan amid widespread public distrust of large banks. You see, the Federal Reserve is not federal in the typical sense. It operates with significant independence and is not fully accountable to elected branches or government. Its dual mandate from Congress is to promote maximum employment and stable prices with a target of approximately 2% inflation. But as we'll soon see, the Fed fails spectacularly in these goals time and time again. And so we're going to examine the hard truths of why the Federal Reserve is dangerous, and we're going to view this through the lens of Jeffersonianism and through the Austrian lens. So let's start with the first negative. Number 1, chronic inflation is a hidden tax on the people. You see, Thomas Jefferson warned us that paper is poverty. It is only the ghost of money. And Thomas Paine called irredeemable paper money as fraud and counterfeiting. Since the Federal Reserve was created in 1913, the dollar has lost over 97% of its purchasing power. So something that cost $1 in 1913 now costs $32 today. The current consumer price index inflation rate is around 3% year over year as of late 2025, and the Federal Reserve considers 2% inflation stable. But Austrian economics argue that any consistent inflation is theft. It debases the currency to help fund the government spending without openly raising taxes. Inflation functions as a regressive tax. It hurts savers and people on fixed incomes the most. And it also enables endless government deficits. The U.S. national debt now exceeds over $38 trillion. Number 2, the boom and bust cycles caused by artificial credit expansion. So in Austrian economics, as developed by Mises and Hayek, explained that artificially low interest rates set by the Federal Reserve distort markets. This leads to poor investments or poor malinvestments, and it creates bubbles that eventually burst. You see, before the Federal Reserve existed, under the gold standard era, financial panics were sharp but followed by very quick recoveries. After the Federal Reserve was implemented, we have now seen the Great Depression, the 1970s stagflation, the 2008 financial crisis, and the inflation spike in the 2020s. The Federal Reserve's easy money policies fuel asset bubbles in stocks and in housing, which primarily benefit the wealthy. Meanwhile, the resulting recession causes the most harm to ordinary workers like you and me. Number 3, unelected power violates constitutional principles. Thomas Jefferson stated that banking establishments are more dangerous than standing armies, and Thomas Paine condemned fiat money as tyrannical, and Andrew Jackson vetoed the renewal of the Second Bank's charter, describing it as a monopoly that favors the elite. You see, the Constitution explicitly gives Congress the power to coin money. It does not grant this to a quasi-private entity. The Federal Reserve officials are not elected. They serve these very long terms, and they face very few direct consequences for their poor decisions. This is something that a lot of the founders argued against. They argued against a central bank, and I think it's more evident than ever why it is such a horrible thing to have this centralized power that's not elected and has no real consequences at all. But let's get into number 4. The Fed enables endless debt and even wars. The Federal Reserve monetizes government debt by purchasing treasury securities. This allows for governments to borrow at lower cost. The national debt has now exploded under that fiat money system. In recent years, the Federal Reserve has experienced large operating losses due to higher interest payments on reserves outweighing incomes from its bond holdings. As a result, it has no profits to the U.S. Treasury. Instead, it has recorded these cumulative losses as a deferred asset on its balance sheets, amounting to over $220 billion as of early 2025. This means the Treasury receives nothing until future profits cover those losses, which is never, ever going to happen if we continue the way that we're continuing. And then lastly, number 5, the Cantillon effects and increased inequality. When the Federal Reserve creates new money, it enters the economy first through banks and in Wall Street. This causes asset prices to rise initially, benefiting those closest to the financial system before the general prices increase for everyone else. Over time, this widens the wealth gap. Austrian economics like Mises and Hayek argue that central planning of money distorts pricing signals, which are essential information mechanisms to a free market. So my friends, the Federal Reserve is the very creature that Jefferson and Paine feared, a monopoly on money unbacked by gold, operated by unelected experts, and responsible for inflation, economic cycles, massive debt, and growing inequality. Alternatives do exist. We could return to the constitutional sound money through gold and silver standard, implement free banking, or allow competing currencies. As Ron Paul famously said, end the Fed. If this message resonated with you, please like and subscribe, and please share this video. In the comments, let me know, do you think we should abolish the Federal Reserve? Thank you so much for watching. Stay free, stay informed. God bless you. Bye for now.